All right, this next question comes from Lee Yandar, and his question is, in the last financial crisis, Berkshire acted as a lender of support for 8 different deals. Despite the injection of expensive capital through preferred stocks and securing warrants, these companies were in fact paying for the sign of confidence from Berkshire in the midst of a crisis, and that was invaluable. Today we have QE infinity, low interest rates, and hungry hedge funds. Even though the economy has deteriorated rapidly over the last few months, why have we not acted as a lender of support yet?
Well, we haven't seen anything attractive. And frankly, it wasn't predicated on this, but the Federal Reserve did the right thing, and they did it very promptly, which they should have, and I salute them for it. But that means that a lot of companies that needed money and probably should have done their financing a little earlier, but they're perfectly decent companies, got the chance to finance in huge ways in the last 5 weeks or thereabouts. I mean, it's set records. Some companies have come back twice. A number of very big companies that didn't bother to extend out their borrowings came a couple times. Berkshire actually raised some more money. We don't need it, but I think it's still a good idea over time. And then there are some pretty marginal companies that have also had access to money. So there is no shortage of funds at rates which we would not invest at. We have not done anything because we don't see anything that attractive to do. Now that could change, very quickly, or it may not change. But in 2008 and 9, the truth is, we weren't buying those things to make a statement to the world. They may have made a statement to the world to some extent, and I'm glad that they did if they did. But we made them because they seemed intelligent things to do, and markets were such that we didn't really have much competition. Now, it turned out that we would have been a lot better off if we'd waited 4 or 5 months to do similar things. So my timing was actually terrible in 2008 or 9, but what was available was so attractive that even though my timing was terrible, we still came out okay, or a little bit better than okay. But it was not designed. What we did was not designed to make a statement. It was designed to take advantage of what we thought were very attractive terms, but they were terms that nobody else was willing to offer at that time because the market was in a state of panic. And the market in equities was in a state of panic for a short period of time when the virus broke out or spread to the United States, and it became apparent. And the debt market was frozen, or in the process of freezing, and that changed dramatically when the Fed acted, but who knows what happens next week or next month or next year. The Fed doesn't know. I don't know, and nobody knows. There's a lot of different scenarios that can play out, and under some scenarios we'll spend a lot of money, and other scenarios we won't. Greg, you've been watching what's been happening around Berkshire.
Yeah, well, I think your comment on the Fed, Warren, because as you know, interestingly, when it was first occurring, there were calls coming in, not the size of transactions we're interested in, nor companies we were inclined to act upon, but there was that general interest out there as people were in a difficult point in time, i.e. looking at their balance sheet and deciding what they were going to do. But the reality is those companies were not of interest. And post basically effectively March 23rd, the companies have been able to act. And Warren touched on it. At Berkshire Hathaway Energy, post the Fed action, we actually issued $4 billion of securities. That was associated with some debts or obligations we had maturing, some short-term obligations we wanted to clearly lengthen out, and we pre-funded one of our capital programs at Pacific Corp with the thought this was the time to get the funds in place such that we could proceed with what is really an excellent opportunity both for PacifiCorp, our customers, and ultimately for the Berkshire shareholders. So we've taken action within Berkshire, as Warren noted.
This is a very good time to borrow money, which means it may not be such a great time to lend money, but it's good for the country that it's a good time to borrow money. Not good for Berkshire particularly, although we borrowed some money, so we've put our money where our mouth is.